If you own a home, your insurance company is quietly hoping you never read your policy. Because if you did, you'd find out you're probably overpaying by anywhere from $400 to $2,000 a year. And not because you're being scammed, it's because the system rewards people who pay attention and quietly punishes everyone else. I'm going to walk you through the 5 most expensive home insurance mistakes families make and exactly how to fix them without switching companies in most cases. Hello, and welcome to the Deliberate Dollar. I'm here to help working families save real money, calmly, on purpose, without the extreme couponing or the financial guru shouting. If that sounds like your speed, hit subscribe. Let's get into it. Mistake number 1, and this is the big one, is letting your policy auto-renew without re-shopping it. Here's what most people don't realize. Insurance companies use something called price optimization. That's a fancy phrase for we charge loyal customers more because they're less likely to leave. It's perfectly legal in most states, and it's happening to you right now if you've been with the same insurer for more than 3 years. The fix? Every 2 years, set a calendar reminder. Get 3 competing quotes. Use a broker if you can, because they shop multiple carriers at once for free. The brokers I trust, most are independent agents, not the big name 1-800 ones. One family I work with had been with the same company for 11 years. 3 quotes later, same coverage, they saved $847 a year. That's a vacation. That's a Roth IRA contribution. That's real money. Mistake number 2. Your deductible is probably wrong. And by wrong, I mean it's costing you money in one of 2 directions. Most policies default to a $500 or $1,000 deductible. But here's the math. Raising your deductible from $500 to $1,000 typically lowers your premium by 10 to 15%. Going to $2,500 can save you up to 25%. Now, and this is important, only do this if you have the deductible amount sitting in your emergency fund. Don't raise your deductible to save $200 a year if a $2,500 surprise would wreck you. But if you've got 6 months of expenses saved, go to $2,500. The premium savings over 5 years almost always beats the one claim you might file. Also worth noting, most homeowners don't file a claim for over a decade. The deductible math is in your favor. Mistake number 3, bundling specifically bundling because the agent told you to without ever doing the math. Bundling home and auto can save you 10 to 25%. That's real. But, and this is what nobody tells you, sometimes the bundle is more expensive than buying them separately from two different companies. Here's the test. Get a quote for your home alone. Get a quote for your auto alone. Add them up. Then compare it to the bundle price. If the bundle isn't at least 15% cheaper, you're better off splitting them and shopping each one separately. I've seen families save more by unbundling than by bundling because they ended up with the right specialist for each policy. Mistake number 4 is sneaky, and almost nobody catches it. You might be insuring your land. Here's the deal. Your home insurance should cover the cost to rebuild your house, not the market value. Those are two completely different numbers. If your home would sell for $500,000, but $150,000 of that is the land it sits on, your dwelling coverage should be around $350,000, not $500,000. Because if your house burns down, the land is still there. You don't need to rebuild dirt. Most policies are quietly inflated by 20 to 40% because the algorithm uses your home's market value, not its actual rebuild cost. The fix? Ask your agent for a dwelling-only replacement cost estimate. Most insurers will do this for free. Many families find they're overinsured by $50,000 to $150,000, and that translates to hundreds of dollars in premium every year. And mistake number 5, the easiest one to fix in the next 10 minutes, is missing discounts you already qualify for. Here's a list of common discounts most families don't know exist. Smart smoke detectors, or a monitored security system. That's up to 15% off. A new roof, less than 10 years old, up to 20% off. Impact-resistant roof or windows, up to 25% in some states. Paid annually instead of monthly, usually 5 to 10%. Going paperless, small but real. Loyalty discounts that have to be manually applied. Professional or alumni group discounts. Non-smoker discount. Yes, that's a thing. Pick up the phone. Call your insurer. Say exactly this. Can you review my policy for any discounts I'm not currently receiving. That one sentence has saved families I know hundreds of dollars in a single phone call. So, 5 mistakes, and they're all fixable in a single afternoon. Let me give you the homework, because watching this video doesn't save you a dime if you don't actually do something with it. This week, number 1, set a calendar reminder to reshop your policy. Number 2, check your dwelling coverage versus your rebuild cost. Number 3, make the discount phone call. If you do just those 3 things, the average family saves between $600 and $1,200. That's the kind of calm, deliberate move this channel is all about. If this was helpful, hit the like button. It really helps the channel. Subscribe if you want more videos like this. And if you're ready to take a closer look at your finances, I'll be putting together insurance audit checklists in the future, using the same process I discussed earlier with step-by-step instructions. Thank you, and this is the Deliberate Dollar, Money on Purpose. See you next week.